Hello everyone and welcome to Monday Morning Must Knows. My name is Merlin Ralphwood, and last week the talk of the town was cryptocurrencies and digital assets. Bitcoin ripping through all-time highs. It was euphoric, particularly for those of us who are involved with crypto. Now this week something very interesting is happening. It is called Crypto Week. And the reason they're calling it Crypto Week is because our elected officials at the House of Representatives, the Senate, are making a focus, a concerted effort to discuss digital assets. And they are taking the entire week. Every day they will be doing something with regards to digital assets. Now, what are they talking about? Well, let's break it down and show you. First and foremost, they are going to be looking at a ban on central bank digital currencies. Remember, a CBDC is digital money. In essence, what it allows them to do is track every single thing that you do. So there is a push to ban CBDCs. The next piece we're going to look at here is they are looking at protecting self-custody. So one of the tenets of crypto is you can take physical ownership. So for example, I'll show you over here, I have this little device called a ledger. This little device allows me to store my public keys and private keys, which give me ownership. If the US government were to say, hey, we want to seize your assets, they couldn't do that because I'm the only one that has the keys to this device. Now, if I had my money over at Wells Fargo or Bank of America or JP Morgan or Goldman Sachs, they could freeze my assets like that. So very interesting that you're actually seeing the government be proactive about self-custody and letting customers control their own assets. The next piece here is the regulation of stablecoins, the Genius Act. Now, this has already passed the U.S. Senate. It's going to go back to the House of Representatives. This, in my opinion, is the only thing that will get resolved this week for your crypto week. And what it means is, once this bill passes, we now have a framework around stablecoins. These are digital payment systems that are backed by US dollars, government bonds, and treasuries. Now, this is so important because what it will allow companies to do, like Microsoft, Nvidia, Amazon, is to issue their own stablecoin. And imagine if Amazon issued a stablecoin that allowed you to buy everything in their ecosystem very quickly. You'd bring your dollars, convert that to Amazon bucks. Now they have you captive in your ecosystem or their ecosystem. More importantly, what it does is it brings fiat currency into the digital world, which means more adoption for digital assets and cryptocurrency programs. And our final piece here is the most important one. They say that the Stablecoin Act or Genius Act is really 7% of the crypto market. The main one will be what's called the Clarity Act, and this will help create market structure, meaning we will get rules on pretty much everything to do with crypto. Remember, Mr. Gary Gensler, with 4,200 employees, in 4 years could not come up with a definition of a stablecoin. Well, we've already seen clarity on that well beyond what Gary Gensler has done, and they want to set the framework for all cryptocurrency for the United States. This will be massive. Now, if you are not involved with crypto, if you're a naysayer and you want to just kind of shun it and say it's not there, good luck to you. Hope that you do well. If you do realize that this is how the financial system is shifting, then I would encourage you to take Trading Academy's focus class taught by that's right. I teach the focus class on cryptocurrency and digital assets, and I'd encourage you to join that one. It'll give you a huge leg up on what's happening in the industry. I'm always out there analyzing projects, telling you the right way to do things, procedures, etc., and just being ahead of the curve with digital assets. Now, let's go back to our regularly scheduled broadcast. It's earnings season. I know it's going to be rather boring, right? It's so boring, bro. There's only 187 companies. Well, it's great. This week, we start things off quietly on Monday with Fastenal. And then earnings season kick in. I mean, really kick in with the financials. You see JP Morgan, Chase, Wells Fargo, BlackRock, State Street, JB Hunt Transportation. That's just Tuesday alone, my goodness. But Wednesday, even more. You've got Bank of America, Goldman Sachs, Morgan Stanley, PNC Financial, Johnson & Johnson, Kinder Morgan, United Airlines. But wait, are we out of it yet? Oh no, we've got more. Thursday, Netflix, John Deere, Abbott Labs, PepsiCo, and US Bancorp. And finally, Schlumberger, 3M, American Express, Charles Schwab, and Ally Financial. So my friends, it is the kickoff to earnings season. This may be one of the big drivers for our markets. Which way? I don't know. I can just tell you, pay attention and be careful in these markets, as some of these numbers could create euphoria or pessimism for our markets going forward. Now let's look at other pieces of information. This could be our longest Monday Morning Must Knows yet. We're going to talk about consumer price index and producer price index. Now we'll start things off with the CPI numbers. As you can see here, it's been slowly drifting lower, meaning inflation is getting better, at least in the eyes of CPI. Right now, the number is 2.4%. Unfortunately, the expectations are that it is going to jump to 2.6%, showing slightly more inflation than expected. And that really would be a 2-month in a row of increased inflation. And there is a large constituent of America, including myself, that believes inflation is going to start to rear its ugly head in the near-term future. But wait, that's the consumer price index. What about producers? The producer price index comes out on a Wednesday at 8:30 a.m. Eastern time. As you can see here, it's been very erratic. Now, this is a different reading. This is going to be your month-over-month change versus the CPI, which is reported on an annual basis. And you can see that there's 3 little gold dashes there on the last 3 months. We've had expectations of 0.2 on PPI, but we were at negative 0.4 and negative 0.5, and then we had a positive 0.1. So inflation from the producer side of things has been way lower than expected. Now, here's the challenge. We are starting to see it rise. The expectations are right now that we're going to come out at 0.3, meaning higher than our previous expectations, more markets and participants feeling like inflation is right around the corner. So could be a troublesome day on Wednesday and Tuesday at 8:30 a.m. Eastern time as these numbers roll out. And this could shape the landscape of rate increases or cuts at the next FOMC meeting. And finally, retail sales numbers coming out Thursday at 8:30 a.m. Eastern time. You notice this one's been fairly volatile. We certainly did not like that last number of negative 0.9 on the retail sales number. That means people just aren't buying stuff. Not looking good. The good news is, and what we really want to see is that 0.9 was an outlier, that it was just a one-off because of tariffs, whatever. We want to see this thing get back above 0. Right now, the expectations are we're going to come out at 0.2, so back into positive territory, which would be a good thing. And then hopefully we'll start to see retail sales increase here going forward. But again, all of these different market segments are essentially the small little cogs in the overall watch that makes this market move. So not one piece is more critical. I would say they're all relevant. This week we've got retail sales, you've got PPI, you've got CPI, you've got a boatload of earnings, and above all of that, if you are in the crypto space, which in my opinion will transform the entire financial market, you do have the crypto week for our legislators, and hopefully they will come up with some good rules and ground rules for cryptocurrencies and digital assets. That, my friends, is your Monday morning must-knows. Lots to talk about. We will see you next week.